Okay, let's get into the stock market technical analysis. I'm going to go through the broad markets and we will look at some of these individual trade ideas. If you guys are finding value, drop me a thumbs up. I do appreciate it. And then if you are interested in joining the private member group, we made a lot of money this week, a lot with the volatility that increased. Link in the description below on that one. Check it out if you're interested. It's $5 a month. So, okay, so the first thing I'm going to start off, I'm going to try to make it real brief, and we're going to start off with Amazon. But I do want to point out that I'm not going to be able to do the live stream this weekend. I'm going to be out of town, so no live stream on Saturday. Okay, let's get into the charts. Amazon, breakdown today. I mean, it broke support, but it's still kind of right there. They're holding it. It's close enough where I can't definitively call that a breakdown on the earnings. If I roll out to the daily chart, you can see basically we've got support, and it's below now, but it's so close that it's just I can't call it a breakdown. Now it could be a breakdown and a back test right now, but I would need to see that rejection in order to confirm that. If I go down to the hourly on Amazon, and the reason why I'm highlighting this one as much is because it's a big component of the triple Qs. So here is the hourly. So it could be a breakdown and then they're back testing it, but they're still holding it close enough to where I think it could be recovered. I'm not going to make a play on it. I'm just pointing it out. If they can recover this and we don't have a breakdown on Amazon and you could see a bounce, and that really sets the market up, triple Qs to bounce as well. Maybe go fill this gap. There's resistance right there at 179. Okay. It's about 179. So let's flip over to the triple Qs. On the triple Qs, starting off on the daily chart, we have, this is a level I've been talking about. It's about 449.50, basically highlighting that level in my videos for the last, week and a half, 2 weeks, something like that, as a key level of support. Because again, if I look at, this was the former highs of that trading range, and we're there now. So it's at support. It's not breaking down. We got 30 minutes to go. Did they dump it into the close? It's possible, or they recover it. So I can't, as of right now, it's at support, and that's really about it. Without any more data, I'd say we hold here and maybe get a bounce. Okay. If they dump it, it's going to flush probably right to the 200-day moving average, about 430.50. All right. And if they hold, then I can see it bouncing. The bounce is most likely, you've got the downtrend line, so you could see a bounce up to the downtrend line, something like that. So that's really all I've got for that one. In general, though, I'm just talking about where prices are now. If you followed me where I said prices were going to go yesterday, and even in the private member group, we got short. Was it yesterday, the day before? I called it out in the private member group and basically saying I'm flipping short. There's just too many things at resistance, and that short was followed by at the lows, a 6% drop in the index, in the triple Qs index. So pretty nice. That short is, it's not objective to short right here and now. All right. If anything, you look to cover. And what I covered today because I saw them trying to pump Amazon back up. And I figured if they're going to hold Amazon and you don't get that sell signal on Amazon, then triple Qs is light. Then they'll probably start hunting for the rest of the Mag 7s, and triple Qs will likely hold up and you could see a bounce. Okay, so when we were at the lows, I saw them starting to buy up Amazon. Figured, hey, we're deep into the money. We'll take the money, sit on the sidelines now, and that's what I'm doing. Now, if they start to dump into the close, we get a pretty bearish close, I'll probably reshort it because I'll be looking for a 200-day moving average, a push down to there. Definitely looking to cover down there. So if I had to guess, I think they're going to buy it up into the close, most likely. That's what I'd be thinking. All right, moving on. The banks, XLF, they're getting hit hard. XLF break, not really a breakdown. I mean, not really like a technical breakdown of support today. We were recently coming off this divergent high. I have it circled right there. That's a divergent high and just boom, sold into. Support looks like it's down around this trend line here. And yeah, that's basically what I've got for support. So I'd be looking for a move down there, and then we'll see what happens. So banks are looking weak. I mean, when I flip over to my financials, they're all getting smacked pretty hard. So that's definitely something to take note of. Gold and the gold miners definitely went through those yesterday. More downside today. So we've been rejected off that trend line. Pretty nice rejection today. Now, I'm not super interested in shorting the gold miners, and here's the reason why. Although when I look at the charts, and especially that weekly chart on the GDX gold mining ETF, we've got this resistance line I've been watching, and I do believe it's probably going to come down to the bottom of this triangle. But one reason why I'm not super interested in shorting them is we're seeing kind of panic selling, or starting to. The VIX has spiked, and we're starting to see that panic selling, and we might get that rush to safety bid in gold, where we see gold starting to catch a bid. You can see gold's like basically flat today, the gold futures. The miners are down, but the metals holding up. So if you see that flight to safety bid in gold, that's going to be bullish for the miners. And, so I don't want to short the miners. Technically, they look like a short, but there is that fundamental factor. Little trade idea right here, JP Morgan. Again, support, break of support right there, okay? This one had negative divergence building for a while, and we got a sell signal. I don't think they're going to be able to recover that in the next 30 or 20 minutes. So to me, that's a sell signal. That should bring us down to 191, all right? Likely get a bounce there, or reaction at least. And then push down after that reaction down to the next level, 180, and we'll see. Those are the two levels I'm willing to look at right now. So I pointed this one out to the private member group earlier today in a private video, so it's a little bit late on this one, but I'll point it out. And if you want more timely trade ideas, join the private member group. GM, this one broke trend. You can see support. There's your negative divergence building and gap down, and just breaking, just broke support. Big sell signal there. Should push down to the 200. Not today, I guess, but maybe gap down on Monday. It should be right down there at the 200, and then you'll probably get some buyers stepping in. They might cut through the 200 just a little bit because I see some horizontal support right about 39, so push down there. And then the target on that one, I like 35.50 or 35.60 basically for kind of a meaningful reaction. There's a big gap there. Probably get a decent bounce there. And then ultimately, I think you're pushing down to fill this gap way down here at 29-ish. Eli Lilly, still hanging in there actually. But in general, the uptrend's dead. So you've got this uptrend line on the daily chart here. All right, walking up there. Sell signal basically came right there. I've got it circled. And we're holding support. Support is about 850, 800. Still holding that. So that's got to go for the next sell signal. Otherwise, you can hold it. You can rally and do a back test. So, send an alert or whatever. But that 800's got to go, and you got to get, some closing candles, at least hourly candles below that level. Bigger picture, and I'll just highlight it and cap the video at this XLK daily chart. So this is again tech sector, tech being the largest, most heavily weighted index in the S&P 500, and your uptrend line on tech is broken. All right, there's your uptrend line, and there's support, little chop through here, but ultimately broke, gapping down right to the 200-day. Buyers should be sitting there, and they're buying it. So I think there's probably going to be a rally, but in general, the trend is broken, so it should be sell the rip. All right, the trend, this isn't just a little dip, hit the 200, and then rally on to new all-time highs. This is a broken trend. You're going to run into resistance. As you rally, resistance will be there. Sellers will be there to smash it down, and then you should continue to break support. Ultimately, we're going to break the 200-day, and we're going to be heading lower. That's my opinion. So I'll get the video out, and I'll catch you guys on Monday.